Yo, what is good, YouTube? We are back with another video. If you guys are not in the free Discord, go join it. It is the first link down below. Today's video is going to be going over the time frame alignment so you can understand if you have the order flow down, if you have a draw on liquidity, what you need to do whenever it comes time to trading, right? So time frame alignment is going to help you with that. Whenever we hit a key level, a key PD array, you want to align the time frame with that PD array and then get your market maker model and take a trade in the direction of the order flow and the draw on liquidity, right? So if we hit a monthly PD array, you want to see a daily market structure shift, CISD, displacement, one of those, and then you take the trade in the direction of the order flow and draw on liquidity, right? So if we had a monthly PD array, we go to the daily time frame. If we had a weekly PD array, we go to the 4-hour time frame. Daily time frame, 1 hour, 4-hour PD array, 15-minute time frame, 1-hour PD array to a 5-minute time frame, and then a 15-minute PD array to a 1-minute time frame, right? Now the PD array that you want to be aligned with, right? If we hit a PD array, it's going to be an order block, a fair value gap, external range liquidity, right? So the PD array is going to be an order block, a fair value gap, or external range liquidity. Now, what do you want to see on the time frame to understand if we are going to be going in the opposing direction and start a reversal from it? CISD, market structure shift. One of these two are going to tell you, right? CISD is going to be a good confirmation that forms your order block, right? Market structure shift, you want to see a fair value gap in the direction of the market structure shift so you can take the trade in the fair value gap, right? So these two are going to be the time frame thing that you want to take the trade based off of, right? So let's hop into the charts and show you what I mean by this. We're going to do the lower time frames. We're not going to mess around with the monthly and weekly. We're going to do the daily and under, because most of the people that watch my channel are day trading anyways, so they're not going to be looking at the monthly and day or weekly charts to base swing trades off of, right? If you use those two, you're probably going to be swing trading, or if you want to see the longer term bias. So we're going to go from the daily PD array to what? The hourly chart, right? So if we take a look at this price action right here, right? We make this swing low, taking out this low. So what do we do after taking external range liquidity? We reprice to internal range liquidity. So we have this fair value gap here in a premium, right? So we come up to a premium right here on Monday. Tuesday, you can see that we have an expansion lower. So what do? We go to the hourly time frame, right? So what are the two things that we are looking for? CISD, market structure shift. Now, we create this displacement lower. Now, the thing is, ES did have a CISD, right? If we want to take a look at the ES had a change in the state of delivery, right? So we come down here and close below this series of up close candles, right? So you can base your trade off of the ES, right? There was no SMT, so we can't use this first up close candle. I don't know what these drawings are, right? So we have to use the series, right? And if you take a look, this is still an up close candle, so the CISD wouldn't be until the entire way down here. But the ES has had a change in the state of delivery. So what do? Right? Well, we have a 1 hour fair value gap, and we have a 1 hour swing high, right? So we have a 1 hour PD array with a 1 hour swing high. So what comes after a 1 hour PD array? The 5-minute market maker model, right? So it's going to be a 5-minute market maker model down to this external low. But we also have swing lows throughout here, which are relative equal lows. So if we run this low, this would just be a low resistance run to this one, right? So we have this sell side right here. So where do we go? We go to the 5-minute chart. Should have went in replay. 5-minute. What do we see here, right? Right here, we dig up into that old high inside of this 1 hour fair value gap. What do we do on the 5-minute? Change in the state of delivery right here, CISD, and we have a market structure shift in 1, right? This low right here creates your breaker block. So this is your high probability short, right? We have a clear draw on liquidity, right? If we go to the daily chart, it's clearly bearish order flow, right? We have shifted structure. We are respecting these up close candles throughout here, and we respected this daily fair value gap and delivered to this low. Now we are repricing into an internal range liquidity pool. So this 5-minute market maker model, right? Original consolidation down here. High probability order block dug into an old high inside of a fair value gap. The only thing that makes this lower probability and not A++ is there's no SMT, right? So you guys see the time frame alignment right there, 1 hour PD array to a 5-minute market maker model. All right, so I'm not sure why I didn't do this example because it's a great example of external repricing back to internal. So we're going to go over this example right now, right? So what do we see here? We take out external range liquidity. What do our eyes draw to? Internal range liquidity. This is the daily chart, 1 hour time frame alignment, right? So right here, original consolidation, right? Sell side of the curve purges this low. Now, right here, we actually do form an SMT with this low as well. So that's your higher time frame SMT. We inverse this fair value gap, right? Inverse this fair value gap. And we also have our low risk sell right here, right? So we form a low risk sell before we inverse this fair value gap. So let's get rid of this inverse. Now what happens from here? We form another fair value gap. Now we don't actually tap into it. So there's no first stage distribution here. This is your first stage on the hourly chart, this fair value gap. What is this aligned with? An up close candle, right? So yeah, we don't tap this up close candle, but it is still aligned with this fair value gap. So this becomes your first stage distribution. Then second stage happens right here. Taps into it, then we purge the high, right? This is a very simple market maker model right here. Original consolidation, low risk sell. We don't actually get our fair value gap first stage right here, but we also form a change in the state of delivery up here. Tap it, then we form our first stage up here. Second stage delivers to the high, right? Now, I was doing the bearish example first, but I should have went over this one first. This is actually a very simple buy side of the curve right here. You can see it very clearly right there, right? Buy side of the curve, purging original consolidation. This is a very simple buy side of the curve. So enjoy the rest of the video. We're going to do another daily to 1 hour level, right? So what do we see throughout here, right? We fail to take out this swing low, but we are repricing into a daily fair value gap, right? So we want to see internal to external. Reprice the internal inside of a premium, maybe even OTE. Yep, OTE comes up into here. And now we want to see if external is going to be the draw. So what is going to be the identifier for external being the draw? The 1 hour market structure, right? So let's head down to the hourly chart. Now, we're on the hourly. So what do we want to see? A 1 hour market maker model, right? So we want to see this area, right? What started buy side of the curve get taken out, right? So let's head over to the ES and see if there was SMT. Yes, there was, right? So we have SMT, which makes this even more high probability. Let's just make this smaller, like right there, so it's not as big, right? So we come up into that daily fair value gap, and then we have displacement lower, change in the state of delivery right here. But to make this even more high probability, SMT will be formed, right? So we want to see a closure below this up close to confirm our bias, right? We also have a 1 hour fair value gap. So SMT, higher time frame key level. That's what makes this super high probability. Once we close below this up close, it should just be confirmed that we are going to this low, right? So we come up into this up close candle, start the overnight session, obviously. Then when market opens the next day, displacement lower, all right? Then we reprice into this fair value gap, comes up into it. Now do we come into a premium? Yes, we do, right? Comes up into a premium, rejects, displaces even lower. Okay, now this fair value gap. Why aren't we using the lower one? Well, it's because of premium and discount. This doesn't lie in premium. We'd actually use this swing high, right? This doesn't lie in a premium. Okay, so what do we do after coming into here? Well, we form another fair value gap, right? But there's no turtle soup yet. So this doesn't have to be fully respected. We could have even came up and took out this high. That's why we even come up here into this one again, right? But once we take out this swing high and displace lower, right? Actually, there's no fair value gap here, so there's no internal range liquidity to respect. So let's see if we form an SMT. Yes, we do, right? That's what the turtle soup is going to be, SMT, right? So we form an SMT, close below this up close candle, taps the up close, goes straight to the draw on liquidity. We can actually just use this order block, right? This order block to this sell side. So let's go down to the 5 minute. All right, right there, right? So we have that 1 hour order block and we have this 5 minute fair value gap. So what do we look for first? Well, we want to see an SMT because this is later in the day, right? All right, so we form an SMT right here. SMT, bearish SMT, so you can soup that high. Now, what's going to be the change in state of delivery? This up close candle, right? Closes below, never violates this high, delivery straight to that sell side, right? So 1 hour level, order block to a 5 minute market maker model. We are going to use this internal to external because most of this didn't happen during open, but we still can use this to our advantage, right? So we have overnight session coming up into a premium fair value gap, and then we have 7 a.m. displacing down to this sell side. So this is going to be a 5 minute market maker model, right? So we have original consolidation right here, right? So we come up into that fair value gap. Do we form an SMT? No, no, no. Doesn't look like we do, except for right there. Now that is where our trade can come into fruition, right? So 1 hour PD array, bearish SMT, displacement lower, right? Displacement lower, comes up into here, right? What is that? That's a doji, so this wouldn't even be a clean change in the state of delivery. No closure below this series. Comes up, takes out this swing high, change in the state of delivery. Fair value gap. Short to the sell side level, right? 730, fair value gap, reprices into here, and then goes straight to that draw on liquidity, right? So you had two chances to get in here after this SMT was, actually you had SMT form, displacement, you can short that fair value gap, right? Because we had a change in state of delivery right here, and even a market structure shift down through here. So this would be your higher time frame breaker on the ES, right? So we obviously respect this, take out a swing high, inverse this fair value gap, order block, fair value gap, displacement lower, fair value gap, breaker block, and then we go to the sell side, right? So 1 hour key level to a 5 minute market maker model, right? So the 1 hour level goes down to your time frame alignment on the 5 minute. All right, so here we are on the 4 hour chart, right? So what do we see? 4 hour internal range liquidity. What do we want to see from here? We want to see external range liquidity, right? So internal to external. So it's going to be sell side of the curve, right? So what do we want to see from here? 15 minute time frame alignment, right? So from here, what do we want to see? SMT, displacement, change in the state of delivery. One of those two to determine that we are going to be going to this sell side. What happens up here? Bearish SMT. So we form this bearish SMT. Now the trade can come into fruition, right? So where do we form this SMT? Inside of a order block, right? So we come up, tap this order block. Why is this an order block? The last up close candle, right? This down close candle breaks the series of up close candles. So now this is going to be your order block. We form an SMT at that order block. Now what do we want to see? Change in the state of delivery right here, right? So these two up close candles should support price lower. What else do we see? Displacement. This fair value gap, right? Now it is the overnight session, right? It's London. So the candles are going to probably color outside of the fair value gap and order block a little bit. Now, What happens here? Takes out a swing high, right? Takes out a swing high, displaces lower, right? Fair value gap, this is going to be your second stage. No, this is your low risk sell. This is your first stage distribution. Then we have what? Another fair value gap. Now, you don't want to short this just out of nowhere. What do you want to wait for? Premium or OTE, right? Right in here. So we come up into OTE and then we go drive to the original consolidation down here at this sell side level. So 4 hour to the 15-minute sell side of the curve, buy side of the curve. Then we form our SMT inside of a key level, order block, fair value gap, displacement, change in the state of delivery, takes out a swing high, displaces lower, first stage, second stage, then we go run to that sell side level, right? So let's take a look at another 4 hour example to a 15-minute chart during New York session. All right, so here we are on the 4 hour chart again. What do we see right here? Well, we have internal range liquidity, so we want to see if external is going to be the draw, right? So we reprice the internal after taking external, right? It always goes from internal to external and external to internal. There's no other way the market moves. It's always those two. So we want to see if the 15-minute is going to align with that, right? So right up here is going to be the draw if the 15-minute shows us, right? So what do? We come dig below this low inside of that 4 hour fair value gap, change in the state of delivery, right? 15-minute is now aligned to go up there. All right, so there is no SMT in this example, but that's okay. We can work with it, right? So what happens? Right here's your low risk sell right here at this order block. First stage distribution right here inside of this fair value gap. This becomes a second order block. So down close candles start supporting price to the draw on liquidity. Okay, now what happens? Overnight session, while 315 creates a fair value gap, overnight session holds this fair value gap to deliver us to the draw on liquidity. Right now, what are we going to look for in New York session? Right here during lunchtime. Okay, this is what our eyes are going to be on: internal to external, right? This buy side. So we come down into internal. We want to see if buy side is going to be this draw, right? So let's go down to the 1 minute chart. Right here, we come into that internal range liquidity. We can just mark off this 1 minute so it's not as big. We want to see if this buy side is going to be the draw. So what happens? Comes and digs into this fair value gap. This down close candle is going to be your order block, changing the state of delivery, right? Close above it, supports price, supports price, supports price. Now what happens? Takes out a swing low. Now I'm going to go to the ES and see maybe we form an SMT. So my other chart's acting weird. I don't know why I can't go back this far on the ES chart, but it's whatever, it's fine. So what happens after we take this swing low? We want to see inverse and a fair value gap, right? So we create a fair value gap inside of this inverse, which creates a what? BPR. So we come down, tap into it. Once again, comes down into a fair value gap, takes out a swing low, and then we have an inverse. So this would be your low risk sell right here at this order block, takes out this swing low, displaces higher. This would be your first stage what? Distribution. Second stage right here, right? And what aligns with this? Mitigation block, right? So we have a mitigation block aligned with this fair value gap, which is the highest probability setup, and it should happen relatively quick, right? So there's a 4 hour to 15 to 15 to 1 minute. So we're going to do the 15-minute PD rate to the 1 minute time frame, right? Because I know a lot of people like trading the 1 minute, so we're going to do that, right? So what do we see here? 15-minute internal range liquidity, right? This is market open right here at 9:30. So we want to see if this is going to be the draw, right? Yes, we already did take out buy side, but the one thing that happens here is a bullish SMT, right? So that's going to make our trade high probability, right? So we form that SMT. We want to see buy side become the draw. So CISD, right? SMT, change in the state of delivery right here. Order block now doesn't tap the body, but it does tap the wick, continues higher, right? What happens here? Inverse, right? inverse a premium fair value gap, right? This would be premium, which we also inverse. This would be in the middle. I'd have my eyes on this one though. Now, what happens here? We create a fair value gap inside of that inverse. Comes down, taps that, so that's your first stage, right? Now what happens with these down close candles? They form your order block, right? Now this is going to be your second stage, which should happen very quickly. Now what do we see here? 2 up close candles that go along with this order block, right? So, boom. Now the stop's going to be tight. Actually, for this day, it's not. Wow, that's a pretty big stop for. We were really volatile that day, right? Go for a 2R. Boom, fills you out. Bang, right? Let's head on to another example. All right, so here we are on the 15-minute chart, which happened yesterday actually, and it was very seek and destroy price action, but there was still a great trade you could have captured, right? So what happens down here? We take out external range liquidity on the ES, right? So we form a bullish SMT. Now, what do you want to play? External to internal. There's no internal range liquidity throughout here, right? So we want to see it reprice back into here, right? So this is most likely going to be our draw on liquidity, right? So we want to see external to internal, but there's none in here. So we want to see it reprice into a premium fair value gap, right? Which would be up here, right? There's no fair value gap throughout here in a premium except up here, okay? So it's going to be a 1-minute market maker model to that high, all right? So what do we see? Sell side, right? This is just straight down. So we're going to reprice back up to this high, okay? So what happens? SMT, change in the state, right? Supports, this would be your low risk sell within here, right? What happens from here? Displacement, fair value gap, in a discount, sorry, I almost said premium. In a discount, this is the fair value gap you want to have your eye on. What happens from here? Displacement, right? But do you want to buy here? I mean, you could with a stop down here, but what makes it more high probability? SMT, right? If you took this fair value gap, you would have been stopped out. Here comes your SMT, right? Now, once an SMT is formed, it should be relatively quick to the draw on liquidity, right? So what happens? Change in the state of delivery, taps this, then you can just use the highest up close candle, right? So we form, or we close above this down close, supports price. What happens here? There's a no wick, right? There's no wick on this candle, supports price, fair value gap, right? Now we are painting outside, right? We are coming down below, but we were also, it was seek and destroy yesterday. So after this SMT is formed and the change in the state of delivery happens, that's going to be your highest probability, right? That's your highest probability setup. And then you can take a fair value gap, but your stop's going to have to be at a low, right? And then you might not catch a 2R, but it is what it is. Trade how you want to trade, right? So 15-minute PD array, external range of liquidity to internal range of liquidity, the only internal range of liquidity on this day, right? Which is this higher fair value gap. Okay, so let's do one more internal to external. All right, so here we are on the last example, 15 fair value gap to external liquidity, right? You can just use this low because there's no SMT and it's relatively equal lows, right? So we have sell side down here that we are looking at. Now, what happens right here? Bearish SMT. That makes the trade more high probability. Now, why wouldn't you try it here? You could, but there was no SMT on the 1-minute chart either. Now, whenever a 15-minute swing high is taken out with an SMT, that's whenever price should speed up to the downside. So let's head down to the 1-minute chart. Right here, it forms that SMT. Now, that's where our draw is. Now, I wonder if we form an SMT here. So let me go check real quick. So there is actually no SMT here. Both of them take out that high, right? But this should not be violated. What is this? This is your change in the state of delivery. We come up, we tap the wick, right? We do paint outside of this fair value gap a little bit, but once this gets inversed, we should be good to go to the downside, right? So this turns inverse, then we start to speed up to the downside. What happens here? Change in the state of delivery, comes in, taps these up close candles, goes lower, right here, fair value gap. Then we continue straight down to that sell side, right? So this would be your low risk sell. This would be your first stage. Whenever we inverse this can be a sell right here at these up close candles. Right here would be your second stage, and then we deliver to this low, right? So these are the time frame alignments you want to be doing, right? If there is no SMT, there is no trade. Once you start following that rule, you will see a lot more progress with your trading, right? So no SMT, no trade, and then time frame alignment, right? So I hope you guys enjoyed this video. I will see you sometime next week, next Monday. I will see you then, and come join the free Discord. I'm out. Peace.